Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the final day of the trade and the tariff headlines continue. Yesterday it was 50% tariffs on Brazil and today it is 35% tariffs on Canadian imports. So more deals could be on the anvil. What India gets is something we are, anticipating and waiting for keenly. But yes, global markets, they continue to digest all of these news. US markets ended higher overnight, but if you look at the futures, they were sharply down. And even Asia Pacific markets, they were quite mixed this morning. Our markets, they have been hinting quite a sharp gap down in the trade today. Yesterday, we broke below that 25,400 levels. So the support comes in at 25,300 levels at this point of time. Now, we did have TCS results being announced yesterday where the top line numbers did miss what the street was expecting, while the net profit was aided higher by other income component. Now, brokerages have turned quite cautious on the counter and they have cut the target price on TCS. So we'll watch out for TCS in today's trading session and of course the entire IT basket, so to say. Another interesting development that came in was Glenmark Pharma's arm inking a licensing agreement with AbbVie to develop and manufacture ISB 2001, which is a cancer drug. Now, this is a landmark breakthrough for the Indian research team and because the company does peg it to become a $50 billion market by 2030. So yes, quite a breakthrough for the Indian research team that is coming in for Glenmark Pharma. So we'll watch out for this Glenmark Pharma in today's trading session and of course the entire pharma basket too. We'll also take up your stock related queries from our live feed, so keep posting them and we'll go to them shortly. Before that, let's quickly take a look at the top headlines this hour. Stocks on Wall Street end higher, but futures slid after President Donald Trump's threatened 35% tariffs on Canada starting August 1. Asia Pacific markets are trading mixed, while GIFT Nifty is hinting at a gap down start for our own markets. Oil prices hold steady following a 2% drop overnight that was triggered by US President Donald Trump tariff threats. Gold prices hold firm despite the dollar holding firm, countering trade tensions. TCS reports a 3.3% revenue decline on a constant currency basis. Sequentially, in the first quarter, margins are marginally higher than expectations. Deal wins remain steady but drop below $10 billion mark. The ADRs of Infosys and Wipro fall up to 5% in overnight trading. Glenmark has signed a landmark licensing pact with US pharma company AbbVie to sell and develop drug to treat multiple myeloma. Glenmark retains rights to India and emerging markets. AbbVie will pay $700 million upfront for exclusive rights to North America, Europe, Japan and Greater China. Rohit Java will step down as the CEO of HUL just 2 years into office. Priya Nair, who is currently the president of beauty and well-being at Unilever, will take charge, becoming the first woman to lead the largest consumer staples company. Right, if you look at yesterday's trading session, Nifty did end lower by about 120 points below that 25,400 mark and nearly 40 Nifty stocks, they ended in the red. If you look at the broader end of the markets, they also exhibited a weak trend in yesterday's trading session. Midcaps continue downtrend for the 5th straight day. And if you look at from a sectoral perspective, metal stocks stood out in the green, but all of them did end in the red. Coming to the fund flows data, they were stood at buyers for the FIIs. They bought stocks which was worth about 585 crore rupees in the cash markets. DII also stood at buyers they bought stocks which was about 20 crore rupees in the cash markets, a smaller quantum, but then both of them stood out to be buyers in yesterday's market despite a weak trend that was emerging. But yes, coming to the option queues data, put call ratio that has jumped to about 0.97 from 0.89 in the previous session. And among the F&O ban list, Hindustan Copper and RBL Bank, both of these counters remain to be a part of the F&O ban. Now, just a couple of minutes before we go to the open, we're expecting a subdued start for the markets. And of course, the GIFT Nifty trends were indicating so. And if you look at the pre-open rate, Sensex down about 300 points. Nifty also below that 25,300 mark at this point of time in pre-open. But on that note, let's quickly get on board with the technical expert of the show. Joining me is Raja Venkatraman, co-founder of NeoTrader. Raja, how does the market look like? You know, so far this week we have had a quiet session, and today after TCS results, it looks like a sharp gap down open for our markets.
Yeah, good morning, Lovisha. Thank you for inviting me to the show. And what we are noticing right now is that the market is definitely not having any clarity at the moment, and it is awaiting some triggers all the while. And now, since the geopolitical news flows are more dominant, that seems to be having a much stronger hold on what the domestic sentiments have to, portray. Now, when you talk about the domestic sentiments, the sentiments which we are looking at is the result season. And we have definitely started on a weaker note, and that is why we are seeing that the TCS results have not gone down well. They have already shown some nervousness, in Infi, in Wipro overseas. Now we got to see the repercussions, what happens at the as the market opens. But then what we need to see is that post the market open, what really happens. So as of now, 25,200 is a very important support. I would say it's like the line in the sand, I would say. And yes, the bank Nifty is definitely poised slightly better than Nifty, but then both the indices are under pressure. But then overall, the sentiment continues to be a little mixed right now. So considering what the market is portraying and market is behaving, so every dip continues to be a buying opportunity, and the levels which I'm seeing right now is around 25,200. I would wait for the end of the day for this level to be crossed. Until then, I would be a wait and watch player on the indices. But then there are stock specific action happening, and as we open, the IT sector will definitely be under pressure, and the early morning trades would definitely be in the IT.
Hmm. Now, since you're talking about the IT sector, let's also discuss about TCS because the company saw a net profit which was rising about 6% on a year-on-year basis, while revenue from operations grew about 1.3%. But on a sequential basis, revenue was down on a Q-on-Q basis. TCS said that it has added about 6,000 employees during the April to June quarter, and so far the stock has been quite subdued. What the brokerages, on the other hand, reaction has been quite cautious, because if you look at Nomura, they have given out a neutral rating and they've cut the target price on the counter because they still believe that the growth visibility for FY26 is quite hazy, and they believe that they continue to expect FY26 to be better than FY25 for major markets. And they also mentioned that the significant margin improvement in FY26 for the counter is quite unlikely. So, a very cautious note that is coming in from Nomura as well. If you look at UBS, they also cut the target price, and they've believed that, since the last 5 years, the stock has been underperforming the markets. So there could be some, de-rating going ahead because the revenue conversion at this point of lifetime looks quite slow. On the other hand, if you look at HSBC, they've given out a hold rating, demand commentary slightly weaker than expected. That's what they have been holding on to. JP Morgan on TCS, they've given out a neutral call, and they believe that the company is likely to miss about a target of about 1% growth in the international business. But yes, TCS on a stock and an individual basis, what are the levels that we need to watch out for, Raja?
Yeah, so when you're looking at TCS and when you're looking at the commentaries from the brokerage houses also, which definitely impacts the market sentiment, they are also having a drift towards the neutral to negative side, and that's going to impact the prices at the open. So I would say that levels of around 3,000 would be sacrosanct, and as long as that level holds, which was in the month of April, I would say that the dip in TCS will be bought into because TCS is being tracked by not only the big HNIs, is also been tracked by retail participants. So a dip in this would be attempted to initiate a long, but then I would say that that should not be done because the overall setup structure remains on a weaker note. So I would say that wait for some recovery here, and the recovery would be only about 3,500. So once it moves above 3,500, then it would be a good time to enter TCS because it'll completely negate the pessimism, and then it would now look forward. So once it crosses 3,500, a potential towards 5,000 is possible in the next 1 year. But then we still need some positive tailwinds emerging, which is not being seen at the moment.
Not being seen at the moment for TCS, and let's see how it's going to track in the markets today. If you look at the first rates that is coming on your screen, we have opened with a large gap down 25,300 below that levels. That is where Nifty has slipped at this point of time. 0.3% cut is coming in for the Nifty. And if you look at the Sensex levels, 368 points downtick for Sensex, 0.4%, 0.4% cut that is coming in for Sensex. Broader end of markets, both of them seem to be not doing well. However, they are outperforming the benchmark indices at this point of time compared to the cuts that is being seen on the headline indices. Bank Nifty, that is also open in the negative territory with about 0.1% cut, flat in the trade. That is where we are at this point of time. Let's take a look at some of the sectoral indices. Nifty IT index seeing a very large cut with about 2% or so. Given that TCS performance has been quite underwhelming, so so the street sentiment is quite bogged down at this point of time. If you look at some of the other sectoral indices, Bank Nifty index, like I was talking about, with about it did open in the red, however it is marginally higher at this point of time. Nifty Auto Index once again in the red, 0.3% cut coming in there too. Nifty Metal Index with about yesterday one of the top sectoral performers, yet it has opened with a negative bias with about 0.1% cut coming in for the Nifty Metal Index too. Nifty Media Index 1% downtick. If you look at PSU banks, they seem to be doing well because they have opened in the green with a little bit of a positive bias. But yes, broader end of the markets, mid-cap and small-cap indices marginally in the red. However, they are faring better than what the large caps have been doing this morning. But let's take a look at some of the top gainers and losers right now. HUL with about 2% gains coming in. We did see the management change. Of course, Priya Nair has been appointed as the MD and CEO, which will be effective from August 1st onwards. The brokerages have been also quite enthusiastic. JP Morgan's note coming in, that was quite positive on the counter. Kotak Mahindra Bank, the other top Nifty gainer with about 0.3% gain. SBI Life, SBI, both of these counters doing well with about 0.2% gain, and ICICI Bank also seems to be doing well. So a little bit of a private lenders mix, and of course HUL, one of the consumers stock given the news development that came in. So all of these combination have been doing well on the Nifty 50 gainers list. If you look at on the way down, TCS, seeing a cut of about 2%, like we were discussing also. Tech Mahindra seeing a cut of about 1%. So, three of the IT majors are dominating the Nifty 50 losers list. That includes the likes of TCS, Tech Mahindra and your HCL Tech with about 1% cut. On the other hand, we can see Hindalco with about 1% cut. Trent, Bharti Airtel are some of the other names too. But yes, yesterday we did see IRIDA also come out with its Q1 performance. We did see that the net profit is down about 33% on a Y-on-Y basis, while revenue rose about 29%. However, if you look at from the asset quality perspective, gross NPA that rose about 4% from 2.45% in the March quarter. So on a sequential basis, if you look at the gross NPA, that has been on a rising levels. And even net NPA also increased to about 2% from 1.3%. IRIDA, how does the stock look like, Raja? Because so far this month, it is not performing well. And if we look at today also, the stock is down about 4% or so.
Yeah, the stock definitely is struggling at the moment. But then when you take a look at the from the higher time frames, it is, yes, considering the market scenario, it is undergoing some profit booking. But overall, the stock seems to be holding on to the higher levels. So after the recent recovery from the April lows, so I would say that yes, there is some profit booking being seen, but the stock is the overall trend is not disturbed. So this can be a minor blip in the recovery stage.
Minor dip in the recovery stage. Let's also talk about the top Nifty gainer, that is your HUL. It's been doing quite well, 3% uptick at this point of time. The FMCG giant also named Priya Nair as its next CEO and MD effective August 1, and currently president of beauty and well-being. She's at Unilever, and she'll be joining the HUL board and remain the part of the Unilever leadership executive. If you look at from the June lows, the stock is up, it's doing well. What can we expect on the counter? But today we are seeing a gap up open, Raja.
Yeah. Yes, this positive news flow which has come in terms of human resource change which has happened, and yes, we all need tailwinds, and this price tailwinds are always emerging in various aspects. So this is a different tailwind which is coming in, and seems to have done well for HUL. And HUL has been in a consolidation stage for almost quite a few weeks. Now we can see that the stock has definitely given a gap up opening. Now the main aim is to hold on to this gap zone, so which is around the 2450 mark. So yes, HUL is on the positive side, and if you see over the last 3 to 4 days, FMCG has been stepping up, and they are playing a good defense role right now on the trends. And I would say that this could be a good time to consider HUL, because yes, it has gone up above this particular zone. So any buying at current levels, one should position themselves to buy at lower levels towards the 2450, 2475 mark, and continue for a trajectory towards 2600 within the next 1 week.
2600 for the next 1 week for HUL that we can track for. Let's take another stock which is buzzing in trade and soaring in trade. That's your Glenmark Pharma. It's seeing a gain of about 10% or so. We did see that the company's arm has signed an exclusive licensing agreement with AbbVie for ISB 2001. So analysts and brokerages have been quite optimistic on the counter. The stock is trading about 2094, and the analysts have been predicting the stock to go as far as 2400. So that means around 26% of upside we could see. What the brokerages have been saying, Motilal Oswal has given out a buy rating on the counter. They believe that this AbbVie partnership has signaled a new era for Glenmark Pharma. HSBC has also raised the target price on the counter, and they have said, while on the other hand, if you look at Nomura, they have given out a neutral rating. But what does it suggest? We have a landmark deal. Raja, what is your target levels for the counter?
Yes, the stock is positioned to move towards 3000 within the next 1 year. But then one needs to understand that when a stock is opened with such a big gap, it's always advisable not to chase, because the market currently is not rewarding any kind of chase which you are doing right now. So it's best that look at some reaction to participate. Now the question is, what kind of reaction can we expect after a 10% upside? So I would say that at least a 5% reaction from the top would give you a more reasonable entry point, right? So what I'm saying is a midpoint of this gap which has been seen, even on the daily charts, if you're having such a big gap, it's a very big gap. And I would say that chasing the stock right now, so those who have invested into it much earlier, in the last show also we had a question on Glenmark, and I had mentioned that it's a Q on the positive side. And I also said that amongst the pharma names, Glenmark continues to remain one of the most strong, the best strong performer. So yes, the stock has come up with some positive tailwind. So now the result seasons are in play. These kind of news flows are definitely going to emerge. So one should keep track of it, and the stocks that are being able to bide and survive this kind of volatile scenarios are the one which one should consider, because even a neutral result or even a negative result may not dent the entire trajectory. So that's how one should play this result season. It's the result season which is unfolding. So a lot of news flows are going to come in, and one should not be chasing the stocks in the current scenario.
One should not be chasing the stock at this particular gap up opening. But let's take some of the viewer queries that is dropping on our live feed. The first query coming in from Satya is asking the view on Karnataka Bank. He's asking whether it is better to switch to IDFC First Bank or South Indian Bank for the next year time frame. Raja, anything on the counter? Because if you look at Karnataka Bank, plenty of leadership exists we've seen, and as a result, the stock has witnessed a drop of about 9% from the past month.
Yeah, so yes, this bank is definitely undergoing some consolidation. Yes, it was undergoing some consolidation more than a year back. And then right now, after the decline which we saw in the last year, the stock is presently undergoing some consolidation. So overall, the stock is not going anywhere if you see the overall trajectory. So if you want to look at a PSU bank, I would always continue to mention Bank of Baroda or Canara Bank as a better bet from the PSU banking space rather than getting into any other PSU banking space. And the third one, which we had discussed last show as well, was PNB.
Okay, PNB as well. Let's take another viewer query then. Debuk is asking the view on Persistent Systems and Coforge. We did discuss about TCS, Raja, but from a mid-cap space, how do they look like? Because so far this year, they have also been an underperformer.
You're absolutely right. Persistent, Coforge, Emphasis, all these stocks from the mid-cap IT space seems to, recover at every dip. So this is what I have been observing over the last few years. And I would say that amongst the IT names, if you want to place your bet on any of the IT names, then this would be the ones which I would track and I would look to participate in the market. So yes, persistent, yes, it may show that it's not moving much, but then when the IT recovers from lower levels, you would see that these are the stocks that are going to function. So keep a track on them, and when they start showing some shines on any signs on any day, those will be the names which I would place my bet on.
Okay, all right. Let's take another viewer query on that note. Mukul Vede is asking, want to enter Electra Trek. So he's asking, what's the view for the next 6 months? Electra Trek so far this year has been an underperformer. So from 1400 odd levels, the stock has slipped to about 1239. Raja, what can we expect from the next 6 months?
Yeah, Electra Green Trek rode the course based on the EV theme for quite a few months. But then over the last few months, what has happened is that the theme has whittled down, and the prices are also displaying those kind of momentum here. And right now, the stock is stuck in a consolidation phase. So I would wait till the levels of around 1280 to 1300 is surpassed. Before that, I would not be an entrant into this. Yes, the stock has given a reaction. This is a good support zone to buy into, but then I would wait for a move above these levels mentioned before I take any call.
Okay, all right. Let's take another viewer query on that note then. Karthikeya Singh is asking the view on JM Financial. Can it be added at the current level? The stock has been on an upward trajectory. Today also the stock is up about 1%, and from June lows it's up about 22%. Raja, what can we expect? Can it be added at the current level, or is it too expensive at this point?
Yeah, JM Financial is a very good selection, and the stock is definitely showing some good upward trajectory even in this dull ranging market. So yes, the stock is. If the question is if the stock is good to buy, answer is yes, but it's not at a good position to add. I would wait for somewhere a reaction closer towards the region of around 150, where it would give me a better risk to reward ratio. And the targets one can expect is in the region of around 200 and 225 within the next 1 year.
Okay, all right. Let's take another viewer query then. GC Prakash is asking the short-term and medium-term view of IRFC. He's holding as of now. He's asking whether he should sell or accumulate at this dip. Anything on the counter? After June rally, the stock has entered once again a consolidation zone.
Yeah, the stock is under a consolidation zone. There is no cause for any addition right now, but then there is also no cause to exit. One can continue to hold on because the overall momentum is still positive.
Okay, overall momentum is still positive for IRFC. So let's take another viewer query. Kishore is asking the view on Zensar Tech because he's been holding the shares, and he's asking what is the level that we need to watch out for. Zensar Tech, anything on the counter? Because the stock seems to be doing well from April lows. 30% uptick, Raja.
Yeah, the stock is continuing to perform well, and especially the defense stocks are showing some traction. So I would say that one should continue to hold on. There is no cause for exit, but then definitely it's not a point to add as well. So it's one can continue to hold. The upward trajectory definitely signals more upside here, so one should not look to exit.
All right, let's take one stock in focus, Tata Elxsi, because that stock has been not performing well. It did report a muted first quarter performance, and we saw that the net profit dropped about 21% Q1Q on a sequential basis, and revenue also declined by about 2% on a sequential basis. If you look at how the brokerages have reacted, JP Morgan has given out a underweight call. They believe that the Q1 print has missed sharply on both the revenue and margin levels for the fourth consecutive quarter. And they believe that auto has a mixed outlook with large deals ramping up gradually, and they have also cut the earnings estimates by about 3 to 5% for FY26 to 28. On the other hand, if you look at Morgan Stanley, they have also given out an underweight call, and they believe that this is another quarter of miss on low expectations, and the company has sounded quite constructive and hopeful recovery could be possible on autos and media front. But yes, the stock is down 7% in the past 1 month, and today also the stock seems not to be doing well. Raja, what can we expect next?
Yeah, the results definitely were disappointing, and the disappointment was shown right at the start of the day. But then, after the disappointment which was expressed, the stock has not gone down further, and in fact, it has only staged a recovery here. So, if one were to, as a trader, one were to short this index, one would need it to rally a bit more, closer towards the 6,000 region, where one can look to initiate short. Yes, the results are disappointing, and if the IT continues to remain weak, then this stock will definitely be targeted. But then, if you are a trader and you want to go short in this counter, then you wait for a rally and go short. And if you are a investor into this counter, around the 6,000 levels is where one should look to exit, because the overall trajectory of this stock is definitely not encouraging.
Trajectory of the stock is not encouraging for Tata Elxsi. Let's take another viewer query on that note. Deepu Jain is asking the view on CET. CET, if you look at right now, the stock has been trading at a higher levels, and if you look at from a YTD perspective, 18% returns, that is where we are at. And from April lows, the stock has done quite well, 42% uptick at this point of time. But yes, the stock has been trading on a higher levels. What can we expect from a 1 month perspective, Raja?
Yeah, the tire stocks have been performing well lately, but then the CET has encountered the May highs, and they are facing some challenges over there. But then, if you take a look at the higher levels, the stock continues to hold on and indicates that yes, there is more positive room out here. So this is what I'm saying. The stocks which are able to survive this kind of market scenarios are the ones which one should consider. So CET is definitely a good candidate, and one can look to add it also at the current levels.
One can add it at current levels. Let's take another viewer query. Manish is asking the view on Oberoi Realty. Oberoi Realty, once again, the stock has entered a consolidation mode after making a higher top in the month of June. What can we expect? How does the near term hold for the counter?
Yeah, the rate sensitive counters are witnessing a lot of volatility in its prices, but Oberoi Realty has managed to perform quite well. So Oberoi, Prestige, Phoenix. So just like the IT, the second tier names are doing quite well, and I feel that Oberoi would continue to perform well, and this is having much more room on the upside. It can challenge its highs around 2,300 within the next 3 months. So one should continue to hold on to this counter.
Okay, all right. One should hold on to both of these counters then. Let's take another viewer query. Manish Verma is asking the view on Eternal and Swiggy. Both of them have been underperformers so far this year. What can we expect on a levels basis, Raja, for both of them?
Yeah, Eternal, yes, has been showing some bit of promise. And yes, looking at the market scenario, there is some bit of consolidation here. So overall, I would say that Eternal is a much better counter compared to Swiggy. So if one wants to invest in the quick commerce space, Eternal will be a much better bet.
Okay, Eternal would be a much better bet. All right, just one last question before we let you go, Raja. What are your top picks at this hour? We're seeing a little bit of a subdued trade, but however, anything that you want to point out?
Yeah, so I would like to go with a sell in BSE at the current levels with a stop at 2510 and a target for around 2400. And I would like to buy IRCTC above 786 with a stop at 780 for a target towards 796.
Okay, all right. This is the stock that we need to watch out for. But with that, we have to let you go, Raja. And thank you so much for joining us. And we hope that we connect with you soon.
Yeah, thank you. Bye.
All right, let's take a quick check of the markets before we move on to our next guest of the show. If you look at from a Sensex and Nifty perspective, Nifty is down below that 25,300 levels, but it has recovered a bit from the day's low. Sensex down about 246 points compared to 300 points downtick that we saw early in the trade. On the other hand, what is contributing to the Nifty's up move at this point of time is your Bank Nifty index, because that seems to be doing well with about 0.1% gains. Other than that, we can see FMCG index once again holding well, 0.3% gain coming in. Nifty Pharma index looks like doing well given the Glenmark Pharma deal that we had yesterday. So pharma stocks have been buoyant on the back of that. PSU banks, private banks, both of them holding well in this market. However, what seems to be not doing well, that is your autos, IT index, and of course, your oil and energy and realty stocks also seem to be on a downtrend. But yes, let's move on to our next guest of the show. We have Kranthi Bathini, equity strategist at WealthMills Securities, joining us. Kranthi, we have the TCS first quarter results. What is your first assessment that is coming in?
Yeah, Lovisha, good morning to you. the bellwether company, the TCS results, by and large, seems to be disappointing to the market. But we need to see, of course, we can understand there is a looming uncertainty around the globe, and the management commentary is cautious, even though they are sanguine about the coming FY26. The medium to short term outlook can be challenging, and the turbulence, that's what we can sensing at this point of time with respect to TCS is concerned. But how the improvement in the global economy, and also especially the US trade war uncertainty, and also the company budgets are concerned, that's going to be the overhang on TCS in the medium to short term. But given the kind of the long-term outlook of these companies, and also the strong business models this company carries, any dip in TCS for a longer-term perspective, definitely investors can add in a very staggered manner. There might be challenges for next couple of quarters, but the long-term outlook can be sanguine with respect to TCS is concerned, given the kind of strong business model the company enjoys.
Okay, all right. All right. So, what is the overall earnings growth expectations that you have from large caps versus mid caps universe this season, Kranthi?
Yeah. With respect to the earnings outlook is concerned, uh, Lovisha, we are quite positive with respect to the mid-cap stocks are concerned, because the last FY25 mid-caps have shown its resilience despite of some kind of worries or some kind of valuation concerns. By and large, mid-caps have shown its strength with respect to the earnings are concerned. And also, when we interact with many of these mid-cap companies, they're quite optimistic with respect to the earning outlook for next couple of quarters and also the coming years. That's where mid-caps could able to sustain in this market consolidation in the past couple of quarters. But by and large, what we can expect going here is we are going to expect a stock specific action as and when these till the time the trade worries still going to be overhang on the market in the medium to short term. So that's the reason we are going to see a stock specific action in the mid and small cap space. With respect to the large cap space is concerned, we can see some kind of a uptick on a year-on-year perspective with respect to the large cap space is concerned. But there are certain pockets in the mid cap looks promising in the medium to short term.
Okay, Kranthi. Do you believe that this earnings growth that we're expecting from the first quarter is enough to fuel the markets higher? Because everyone has been chasing for Nifty to clinch that all-time high levels.
Uh, we are just cautiously optimistic with respect to the large cap outlook of the earnings with respect to the Q1 is concerned. There can be a sectorial rotation. That's what we are going to expect. The IT, which carries significant weightage with respect to the Nifty is concerned, that's going to have some kind of a pressure in the medium to short term. But we can expect some kind of improvement with respect to the banking and power. These are the sectors looks promising at this point of time, and capital goods also looks promising in the medium to short term. So these are the sectors that are going to lift the Nifty earnings, but IT can be the dragger in the medium to short term, given the kind of global uncertainty what we are witnessing at this point of time.
Kranthi, you mentioned that IT is a heavy weightage. The other pocket that is there, that is your banking index. So from the first quarterly updates that we have been seeing, they indicate that there is a sluggish loan growth and margins could be under pressure because the rate cuts could translate into repricing of loans on a lag basis. So what is your assessment from a banking sector? Can we expect it to drive the market rally, or it could be subdued for this quarter?
Lovisha, markets are always forward-looking. So, in terms of the rate cut cycle, what we started, we can expect the credit growth to boost further. That's where the banking and financial services take the edge, rising their earnings in the next coming quarters. So that is the reason any dip in the banking stock, it can be private or public sector banks are concerned. It can be the mid and small cap, and even the large cap banks also looks attractive to us. It's going to be more stock specific. So banks are looking attractive at this point of time, given the kind of credit growth that's what we are going to see, and also the demand that's taking place, rural as well as urban, and the cooling of inflation that's going to benefit the banking and financial sector in the medium to long term.
Okay, okay. You also mentioned that you are bullish on the capital goods space. I want to understand, because the private capex is still not picked up yet. Would you suggest that investors should stay a little cautious on the counters from at least the medium term perspective?
Lovisha, in a medium to longer term perspective is concerned, again, we have the budget, and also given the kind of infrastructure thrust we are witnessing, and also the defense, one of the high performing sector. So these are all the components that's going to have some kind of a positive impact on the capital goods space is concerned for a medium to longer term perspective. So investors with a long term horizon, definitely any dip in the capital goods one can add in the medium to longer term perspective. And also engineering is the space looks very attractive to us. The key sectors what we are looking is at this point of time, we call it as a DCP. Okay, defense, capital goods, and power. These are the sectors we are looking forward. There can be stock specific action that's going to be there in these sectors.
Okay, okay. Defense pockets, yesterday we had a note by Motilal Oswal. They actually pointed out on Bharat Dynamics, saying that the stock has been trading on a very expensive level and they would prefer lower entry points at this point of time. And if you look at majority of the defense pack, yesterday also they were seeing some profit booking. Today also the counters have been quite low, and it's a broad-based weakness in the market as well. But going ahead, fundamentally, do you believe it does have more to sustain in terms of rally?
Lovisha, if we observe the defense as a pack, many of these stocks have rallied more than 50% from its recent lows in the past 1 year. So whenever there is a consolidation that takes place, okay, these are the stocks which can expect some kind of profit picking. But in specific to BDL is concerned, the stock has rallied from its low of 900 to it touched a level of 2000 level. So at this point of time, in a medium to short term perspective, it's fully priced in. But for a longer term investor is concerned, any dip in the stock one can add. Still, the earning visibility is decent for these companies. And these stocks also comes up with a decent margin of safety, and also strong order book and earning visibility is still there. In a medium to short term, these stocks are looks priced in at this point of time. They are fairly valued. Any dip from these levels can be a good entry points for the investors who want to participate in the defense story is concerned. There can be stock specific action. There can be some kind of pockets where these companies are carrying exorbitant valuations. One need to be very stock specific with respect to the defense is concerned. And the large cap space in defense is concerned, names like HAL, Garden Ridge, Cochin Shipyard, Mazagon Dockyard, or BDL are concerned. Any dip one can add for a medium to longer term perspective.
Okay, okay, all right. Kranthi, and how are you finding the realty space? Because yesterday we saw some good pre-sales data from Prestige Estates, but for Godrej Properties, the pre-sales were below the estimates, and some of the brokerages were concerned that it could fail to meet its FY26 guidance. How would you approach the realty space at this point of time?
With respect to the reality valuations are concerned, they're fully priced in at this point of time. But we need to wait and watch how the entire scenario of the credit growth that's going to take place. There are some kind of a divergence with respect to the reality players are concerned. They're fully priced in, but what I believe in a medium to short term perspective, there is a limited upside that is there for reality stocks are concerned in a medium to short term perspective, Lovisha.
Okay, all right. Given that it's a fully valued market at this point of time, Kranthi, anything that you're finding that could actually outperform the market going ahead, at least from a medium-term perspective?
Lovisha, that is a challenging task for any of the portfolio manager or a stock analyst who want to pick up the stocks at this point of time. But one need to do a cherry picking at this point of time. As I mentioned to you, the very stock-specific actions, what we are finding in pharma, and as I mentioned to you, defense, capital goods, power. These are the pockets where we're looking for the opportunities. One need to be very stock specific in this market, given the kind of the current valuation picture and also the earning outlook is concerned. It's a challenging task, but still, as a portfolio manager, one need to be in the job to pick up the stocks at a decent valuations.
Okay, okay. Any sector that you believe that investors should remain on the sidelines for the time being?
What we can sense at this point of time is IT in a medium to short-term perspective. There can be turbulent times with respect to the looming uncertainty of US policies are concerned. So this is the sector I would be sidelines in the medium to short-term perspective. But if I want to chip into the longer-term money is concerned, in a very staggered manner whenever the stocks comes below its long-term averages, that is the time would be chipping in. But in a medium to short-term perspective, we try to avoid the stocks in IT, given the kind of turbulence what we are witnessing at this point of time.
Okay, all right. All right, with that, we have to let you go, Kranthi, but thank you so much for your time and we hope that we connect with you soon.
Thank you, Lovisha. Always my pleasure to share my views with you. Thank you.
All right, let's take a quick check of the markets. We have trimmed some of the losses that we saw today, and Sensex is now down about 175 points and Nifty is back below that 25,300 mark. So yes, we did below, open below that 25,300 mark, but we are back above that 25,300 mark at this point of time. 0.1% cut that is coming in for the Nifty. Both of the benchmark indices have been trading in the flat at this point with negative bias. If you look at some of the sectoral indices, FMCG has been the top contributor, seeing a gain of about 1% or so. Bank Nifty seems to be doing well. Pharma index also soaring in the trade with about 1% gains. On the other hand, Nifty IT index, that continues to remain subdued. 1% downtick coming in for the Nifty IT index. Autos, realty, both of them continue to be in the negative terrain. On the other hand, broader end of the markets, mid caps and small caps, once again in the flat, but with a negative bias at this point of time. So all in all, it's a subdued market, but we are trying to recover back to green because both the benchmark indices are off its day's low at this point of time. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing how the market is developed and what the stocks were in focus. Until then, signing off.